Direct quotes, bid-ask quotes, cross-currency quotes. These are all terms that you hear in the interbank FX markets. Hello everybody and welcome to the fourth lesson in the FX trade life cycle on the FX trade. I'm your learning partner Sushila Hariharan, and if you are watching this video, it means you are interested in a career in foreign exchange, corporate actions, trade life cycle and OTC derivatives in investment banking and hedge fund accounting. The first three lessons in the FX trade life cycle took a look at some of the pre-trade requirements that are there, understanding the quotations, etc. But this one is specifically on understanding the FX trade itself, the quotations that are there, the base currency, the quote currency, what do you mean by bid-ask rate, and understanding cross-currency rates. So if you're ready, if your notebook and pen is ready too with you, then let's dive straight into this topic because that's what makes FX very, very interesting. You can't compare it to a subsidy market, you can't compare it to an equity market, you can't even compare it to a bond market. So let's see what is all the trade about. The market structure is a OTC market that is decentralized trading. It's driven by institutional investors like hedge funds, mutual funds, and it is largely driven. The participants come together through broker-dealer community, which is a very, very strong community in the FX markets. Okay, so this decentralized trading obviously poses a larger amount of credit risk as opposed to exchange trades, but now settlement has to be done mandatorily through the CCP, so we'll get to learn a little bit more on that. Let's take an example straight away. Hari Hedge Fund has taken a short position on USD Euro 10 million, okay, at a rate of USD Euro 0.8550. So in this video, we're going to try and explain only the different terms that are there, okay? I'm not going to talk too much about how speculative the FX market is or where currencies are headed, etc. But this is an interesting way to look at how currencies are traded. The USD Euro is equal to 0.8550 for purposes of simplicity of only this particular slide. I'm going to explain this quotation, okay? Otherwise quotes are given a little bit more elaborately or less finely, okay? The USD over here is called as the base currency, the currency against which the other currency is quoted. So over here currencies are always quoted in pairs, PAIRS. Pairs means one currency is quoted against the other currency. So over here, euro is quoted against the dollar. So if EUR is quoted against USD, USD is the base currency and EUR is the reference currency. This means for 1 USD, the trader will have to pay or receive 0.8550 EUR. Okay? So in this case, USD is considered as a constant and EUR keeps changing depending upon the market that it is traded in. That's how it is, the base currency and the reference currency. So to recap this particular slide, currencies are always quoted in pairs. One currency is quoted against the other currency. The currency against which it is quoted is called the base currency. The base remains the same. The reference currency keeps changing. So over here, it is euro that is going to change against the USD. You can also quote EUR USD. Okay, so 1 EUR is equal to how many USD? If you are a little maths genius out there, given the answers in the comment section below that how do I convert USD Euro to EUR USD. Okay, let's move on. USD JPY, another currency pair. USD is the base currency. JPY is the reference currency. In some markets, especially in the Asian markets, it's called as the quote currency. And it is at 151.25. So actually JPY is even weaker than the INR. Okay. Over here, 151 is called as the big figure. In trading terminology, big figure is that part of the quotation which doesn't change for some days together unless the market is very, very volatile. What changes is this 25 called as the pips. Because FX markets are so volatile and they are so speculative in nature, prices change at the blink of an eye or even faster than that. Pip trading is very, very popular. So traders are normally are watching at least 7 to 8 screens at the same time. They really don't have the time to write in the big figure. So they straight away go and write in this the pips. So the pips is the uh, number which changes against the big figure. In USD JPY, this looks like a more elaborate quotation. Okay, the trader is quoting a rate of 151.25. A little hyphen over here, 151.30. So, how do I interpret this quotation? This quotation is interpreted like this: 151.25 is the bid rate, the rate at which the trader will buy the base currency. What is the base currency over here? USD. So the trader who's giving this quote will buy JPY will buy USD against JPY at 151.25. They will sell USD against JPY at 151.30, and that's called as the ask rate. Such a method of quotation is very, very unique in two markets, FX markets and money markets, money bond markets. And this means that the trader is willing to both buy and sell at the very same time, which makes him a very powerful trader because he is able to give a quotation for a certain volume running into millions of dollars, perhaps, just on this one case. The USD JPY over here is 151.25. The bid rate is 151.25. The ask rate is 151.30. The difference is between the rate at which they will buy, the rate at which they will sell. It's called as the bid-ask spread. This spread is a healthy 5 pips over here. Normally it would be much lesser. Let's say, for example, in the case of euro, it would be as tiny as 2 pips. Okay, so different currencies have different pips, different spread pips because of the fact that the trading happens in such a fast and technologically superior mechanism. The USD euro is equal to 0.8550. The USD JPY is 151.25. But we want to know what would be the euro JPY rate. Okay, how do we calculate that? The rate, such a rate where the base nor the reference is the USD, is called as a cross currency rate, where USD is not in any leg of the pair. Okay, so till now we've always seen that USD is a part of every currency pair, but suppose you want to derive a currency pair which is not dollar denominated, you have what is called as a cross currency rate. The cross rate, USD euro is 0.8550, USD JPY is 151.25. The euro JPY rate is 151.25. Simple arithmetic that we learned in grade 3 or grade 4 helps us achieve the euro JPY rate. The next lesson, we'll take a look at FX settlements and what are the post-trade activities that have to take place, especially an understanding the nostro vostro accounting that has to be done in the case of settlements of FX trades. Thank you so much.